Hello everyone. Welcome to Search for Yields, fortnightly newsletter from INA Bonds. I'm Nikhil. In today's topic, as we come close to the quarter two of the financial year, I'll be updating you on the bond market highlights and as well as what are the secondary market offers in AAA and below bonds as well. In quarter two, we have seen started with the Fed in July. They hiked interest rates by 25 basis points and they maintained status quo. And RBI also maintained the status quo and they went with a incremental CRR of 10%. This incremental CRR impact on the banking industry in this quarter will be close to 1,200 crores, out of which HDFC Bank will be taking the most of the hit and Axis Bank will have a very negligible kind of hit as they have a very lower amount of incremental deposits in the quarter one. And in the quarter two, the major highlights also remained is from the Jackson Hole, where the Fed chair said that there are high input inflation pressures for the economy, and if they see any incoming data where the inflation is rising, they might go with another 25 basis point rate hike and maintain this higher interest rates level till the time inflation comes down to 2%. And in the similar lines, RBI central bank also said the same thing, as the data will direct their direction of interest rate path, and they have maintained the status quo. And in the secondary market offers, if we come, most of the funds in the AAA, the bonds are traded at below 1 year FDs, and which is why the AAA bonds are not finding that much of attractiveness. Lower than 1 year, where the bonds are traded at from 7.2% to 7.7% for a 1 year maturity bond, and very close to maturity, that is 2 to 3 months maturity in AAA bonds are traded at 7.25%. Offering investors lower yields than the FDs and as well as the NECP CDs in the market. And if we go for a 1 year type of a maturity, where we are getting Sundaram is offering 7.72%, and also which is lower than the 1 year FDs, corporate FDs offered in the market. And if we go a little lower down the rating scale, that is SBI PERP, that is a AA plus, and since it's a PERP, it got AA plus rating, and the 1 year or less than 1 year perps are traded at 8% to 8.1%, where that's a break-even kind of a level with compared to FDs. And if you go down further down the rating scale, where there is Ashirwad Microfinance subsidiary of Manappuram is offering 9.45%, and the Hinduja Leyland is offering 9%, and the longer maturity bonds like if you go 3 years and 5 years, like Five Star Business Finance is offering 9.18, and Annapurna Finance is offering close to 13.11%. So as the rating scale comes down and the maturity is increasing, we are seeing the yields are slightly picking up. But however, as of now, the yield curve shows it's a flat from 3 year to and above. If you're wondering where you can see such bonds for investment purpose, you can check out QuickInvest app by INR Bonds, which is available on both App Store and Play Store. Download the app to invest into the bond markets. And
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
if you're a financial advisor and if you want to recommend bonds on base of your analysis, understand the risk of the bond markets, you can check out the partner portal, which is exclusive for the financial advisors. You can use the app to or the web portal to place bids and offers on behalf of your clients, and also access our curated list of bonds and information to grow your assets under advisory.
Attention financial advisors. Want to attract new business and customers? Offering a new asset class is the key. With debt mutual funds and MLDs losing their tax advantages, your clients need to diversify fast. Look no further than corporate bonds, the perfect solution for safety and good returns. Partner with INR Bonds for expert guidance and valuable resources to get started. Access a wide range of bonds on our portal and manage your client investments with ease. Visit partners.inrbonds.com today and unlock new business potential.
And coming back to this topic, and we in the primary market also we have seen the issuances above coming above 9% are seeing a lot of traction. Lately, we have seen the Navi FinServ came out with 800 crore issuance and which offered yields about 10%. And Great Access Grameen came with another round of fresh issuance of 1,000 crores in back to back in the last 8 to 9 months. So the bonds were offering from 9.5% to as much as 10.13% for a 5-year bond. And the Chola also came with the 1,500 crore issue with offering 8.3%. Comparative to Credit Access Grameen, the Chola has seen a good traction, but it took a while to fill up the whole the IPO. The Credit Access was much quicker since it is offering the much higher yields than Cholamandalam. The Cholamandalam, those bonds are traded at 8.2% to 8.35% types for a maturities of 25 to 28. Thank you for listening in. Do subscribe to our YouTube channel if you're not done so already and get our timely updates about bond markets and as well as the bond bikes. Thank you.